Oh, hello. I didn't see you come in. Let me put my phone down and really look at you. You're worth my attention. Uh, Hi, guys. Welcome to another Uncomplication. Happy New Year. Happy 2024. I think this will be my best video of the year, so I'm just going to get it done early, and then I don't have to worry about it. Um, yeah, I think you're going to want to listen to this one. I've got a lot of thinking that I've actually recorded 3 or 4 videos before this that I haven't posted, and so this is going to be the most distilled, juicy, insightful video that I can muster for you to start your 2024. I want to begin by acknowledging how much has changed in a year. A year ago, I was looking at this video, 2023 crypto predictions. This was January 5th, and I just see that little Ryan down there in the corner, and I feel for him. I appreciate him. I see how hard he worked and how light he took certain things, and I think that is why in that video I'm sitting in my living room, and in this video I'm sitting in an art studio that I am a resident artist at. I can see in the background of that video I have like a few little small paintings on the wall, and now I'm finishing these really large and beautiful ones. And so as you know, if you've been watching this channel, I'm not really here to talk about crypto. I'm here because I am a living, breathing human, and you are too. And what I'm ultimately interested in is that we are living our best lives, and we are manifesting our dreams. And one of the things that, if you've heard me talk in the past, crypto seemed like this place where normal people could get out of the system, get out of this capitalist, corporate greed-driven nightmare and write our own ticket. And because we were first movers and in on this big secret, that there was the opportunity to have more energy behind our actions. And sadly, friends, I don't think that's the case. I don't. I think that the mythology surrounding Bitcoin, it might have started from a place of purity, but it has been co-opted, as things often are. And I can let go of that. I mean, it was a bit of a religious falling out to realize that this, immutable, sacred digital gold was an open source project run by miners that want to profit from it, and liquidity providers that are creating a market to it, and app makers that are giving us on-ramps to buy it. And it is what it is. And once I was able to just step outside of the mythology and get into the real nuts and bolts, that's where it makes a lot more sense. That's where it's a lot more fun. And that's where just the psychology and the learning actually matters. Because if you're sitting there and you're thinking that, everyone else is a fool, this is the thing, this is the lifeboat, you're in the know, and you're reading the right news and listening to the right YouTubers, and so you're gonna escape the system. We saw what happened last time. If you were here in 2021, the megaphones were turned up just as loud, the influencers were just as sure, and what was it? A market cycles. So let's take a look. I want to talk about my prediction from a year ago and how it was wrong. And why that's actually, in my thinking, is actually a worse starting point now than it was a year ago, believe it or not. Even though prices are up, my prediction was wrong, but that's because I was looking at what I wanted to see, which always happens, right? The eye sees what the mind is prepared to find. And so my 2023 predictions were based on a best case scenario, and my 2024 predictions now have what happened as part of them. So real quick, in 2023, January, I was drawing on my chart, scribbledy-piggledy, this basic cycle, this basic sine wave. It went up, it comes down, it goes up. And this is the most simplistic version of a wyckoff mindset, where we had accumulation. 2017, 2018 was really the first big test of can Bitcoin support the kind of institutional games that go on in the larger markets and stocks and Forex and more traditional places? And so we saw in 2017, this really kind of typical move where it's a parabolic run up and then a crash back down. And that basic chart pattern we can see across all kinds of small cap coins, all kinds of little projects. We can see it in sort of stocks that are stonks, or these kind of meme projects where it's just, those in the know are building this case, and when it's time to go, they press the button, everyone's shouting about it, it goes to the moon, and then it comes crashing back down, or it goes towards the moon. Then in 2021, 2020, 2021, we had this, what is now kind of famous, this wyckoff distribution. Wyckoff at the most simple distilled form is that a market is a cycle, and it oscillates from accumulation, people buying cheap, and then distributing those shares, those tokens, those coins at a profit, and then it comes back down so it can happen again. And so if you decouple from the mythology of Bitcoin being this, scarce, life-giving, next generation currency for the planet, for the people, immutable, all that kind of stuff, and you now see it for what it is, this marketplace where people are profiting from accumulation and distribution, minute to minute, hour to hour, week to week, year to year. We can see that my prediction in 2023 was essentially this, right? We had a distribution area. Now we need to come back down and have a markup, have a accumulation area so we can mark it back up. And while I have this diagram up, another thing that I just want to plant seeds in your mind is that if you turn on crypto news right now with prices up around 42, they were at 45 over the weekend, I think. The news to me has just been shocking how inane it is. It is, I'm not going to go on my big soapbox, but the types of information that's getting bandied about here by experts and expert analysts from BlackRock, from this guy, the Plan Bs, the Michael Saylors, and everyone in between, building this case for the ETF being the harbinger of profit for everyone, that the ETF is going to be approved and Bitcoin is just going to jump from, about, what's the Bitcoin total market cap right now? Let's just go to the all crypto market cap. So we're at about 1.5 trillion total market cap for all of crypto. And the expectation is that by ETF being approved, within the end of 2024, we're going to see, I've heard in some cases predictions of, $100,000, $200,000, $500,000 Bitcoin. We're looking at 2 or 3xing the total market cap in a year. And I have other reservations about that. I've talked about that in past videos. Just if you go to BlackRock's own site and look at their biggest ETF, BlackRock has the biggest ETFs, and their biggest is an S&P 500 ETF that I think has a few $100 billion under management, but it's nowhere near the multi-trillion dollar levels that we're looking at for ETF. So my point is, the news right now is leading us to believe that this is what's going to happen. Okay? So people that are buying in now have this expectation of, $2 trillion, that would get us back to our all-time high. This mentality that it can only go up is absolutely out of odds with this basic market cycle, because what is happening is that there was accumulation and there's distribution, and there is a relative proportionality to this. So if you have a little accumulation, you're not going to get to a huge price level and a huge sustained distribution. Little accumulation, little distribution, bigger accumulation, bigger distribution, and higher prices. And so in 2023, what I was hoping to see was this kind of Wyckoffian schematic start to develop that was about proportionate to the big distribution we had, so we could build a strong cause and blast back off. But instead what happened was we had another big grab for profit, and we had a short accumulation window followed by a run up in price. And while that might seem good, it's actually one of the worst things that could have happened in terms of the length these cycles take. It's like, you're trying to, what's a good analogy here? It's almost like eating between meals. Like you want to have a big feast for dinner, and so you have breakfast, and maybe you even skip lunch, so you're really hungry for dinner, and you prepare a big feast, and like that's the thing that we all want, right? The steak. But instead it's like this opportunistic snacking that is just like delaying and resetting and prolonging. It's not the best analogy, but essentially that's what it is. It's like this greed that is gobbling up bad food rather than allowing just the natural healthy cycle of a market to play out further. So here's what I wanted to see last year. I wanted to see, and it's foolish to just make predictions based on what you want to see, but we had not quite put in, actually, where were we? So January, December. Okay, here's December 22. So we were just about that bottom. And what I was kind of drawing was this sort of like, noodling down here. What I properly should have drawn is, okay, we come down, we have an automatic reaction, we come back down again, we kind of, do the jig-jaggy Wyckoffian moves, maybe a little spring, and then boom, off to the races. And proportionately, for this size of a distribution that got us to our last all-time high, to get to those higher Fibonacci extensions, let's just draw our Fib extensions here. So if we really wanted to blast off and see extensions up into this kind of an area, this might make a little bit more sense on the log chart. Yeah, this will be easier to look at. So we want to get here, okay? As a market, we want to see, right now this is saying, $250,000 Bitcoin. Wouldn't that be sweet? Okay, how do we get there? Well, by taking our time and putting in more structure and grabbing up this liquidity that's down here that's still hanging out from the last time we blasted off, that could build a cause that would be sufficient to get up to these higher levels. Because we didn't do that, and we just blasted off right away, we're tapping out right about this 618, and we have to come back down. No matter what, you have to do the work. If you want to go up, you got to go down. And so we're looking at a couple different scenarios, and that's what I want to kind of get into for this next little part of the video. So let's go back to just the regular, just because that's kind of where I've been drawing these images. So here's 2023's prediction. Come down, nice Wyckoff style accumulation, an automatic reaction, or a selling climax, then an automatic reaction, and then the all of this kind of stuff that goes on in between. That's not what happened, so let's get that off the chart. Now what could happen? Well, there's really two things that I now think, and I'll disclose that a lot of my thinking this year, or last year I should say, came from Mayfair Trading. This dude is just next level. He is so good at not only making awesome predictions, but really breaking down the cycles and the patterns. And so I've really enjoyed following his content. He helped me just make sense of things kind of early this year. Highly recommend that you go check out Mayfair. So, in following his logic and just applying my own kind of translating understanding, here's sort of the two scenarios that I think are available to us at this point. So let's get rid of the moon narrative. If you want that, you can go on to other places. People are, mainlining that all day. That, to my understanding and observation, has never panned out. And it never will pan out. It's absolute garbage. If you're swimming in that pool, it might be a fun party until it's not. And then when you come back after you've been wrecked, okay, you can hang out. I'm a nice guy. So let's just, that is not a prediction for 2024. We're not going to have just ETF is approved and all of a sudden $2 trillion come flooding into Bitcoin. It would be the worst possible time to do that anyway. It's almost cliche, but the buy the rumor, sell the news. The big operators are not here to make retail rich. They're here to get rich off of retail. So, and they're doing a good job of it. I mean, I'm blown away that we were able to see $45,000 again as quickly as we did. But where does that put us? Okay, well, here's two kind of overlapping but different ending stories. One is, still thinking about wyckoff, still thinking about accumulation windows. Last time we had a major run up in price. By major, I mean, from bottom to top, 1,700%, run up in price. That's what we, call a bull run. In order to get back to that level of intense, sustained motion, last time, like I talked about, we kind of had that institutional test in 2017, and then the accumulation range was over 32 months. So, over or just about 3 years was that accumulation range to build that kind of a cause to go up that high. Since our all-time high, our accumulation, let's just say that this, well, here's the challenge. All right, so let's say this was our selling climax, and then this was our automatic reaction, and then we came back down for a spring. That gives us 5 months of accumulation. So from 32 months to 5. Okay, so just think about that. That's the gas in the tank. How far are we going to go with that much gas in the tank? I don't think anyone who is seriously, looking at longs for Bitcoin was excited to see price take off this quickly, because we're stalling the accumulation that still needs to happen. There's still liquidity down here. There's still structure that needs to be put in. And so there's really, at this point, two scenarios that I think are at play. One is what I have here in orange. Zoom in on this a little bit. And so just looking at Elliott waves, if this was a 1 and we had a 2 and then a 3 is where we're at now, we might come back down for a 4 and then rocket up to a 5. But again, we're tapping out at about the same levels that we were at last time. So we're not really getting anywhere. For those people that bought in during the last bull run, I always say that with some tongue in cheek. But a lot of people, these are their entry points. So we're looking at just maybe break even in this kind of a 5-wave scenario. There could be. Okay, so then what's the other scenario? And to be clear, I think this is the scenario I want to see least. In my mind, this is like the most short-term opportunitarianism at the detriment of the viability of the long-term potential of Bitcoin. So this is just delaying what needs to happen by an even larger amount of time, because the crash down from this, it's going to be a lot longer before there's interest again. And it might not ever get to the same kind of hopium fuel that there was in these last couple cycles. It's like, fool me once, shame on you. Fool me twice, shame on me. Fool me 3 times, really shame on me. Are you going to fool me a 4th time? I don't know. Probably there will always be the next fool. But anyway, so this is option number 1. I don't want to see that happen. The other possibility here is that we're just early. We're just earlier in the accumulation. And so this, December 2022, that being the selling climax, we might only now be getting to the automatic reaction, this part right here. I'll say that again. We might only be getting to this automatic reaction. And, it doesn't have to follow this exactly, but the basic schematic for an accumulation, it almost necessitates some of these moves. You come down, you find a bottom, there's a reaction. We were supposed to, this was kind of last year's prediction, we were supposed to kind of come up, find that automatic reaction, and come back down deeper, and then go up a little higher, and then come back down. And just that sideways motion is what builds that long-term position. We didn't get to do that. So it's more likely then, let me get rid of these just for the sake of clarity for a second. The other way to look at this is more of an ABC correction, which that, is actually a better scenario. It'll have a shorter term pain, especially for all the people that are huffing the ETF fumes right now. But, if we came down, we put in our A, and now this is our ABC correction from our last market cycle, then, this would be the selling climax. This would be the automatic reaction. And then we might come back up, come back down. It lengthens the time that we have to wait for meaningful blast off. I don't know that I have this quite to scale, but this is looking like, 2026, 2027, that's a much longer period of time. But I think for a healthy market move, and this is probably like pretty compressed. Let's try this a little bit more like, C, come back up, back down, jag along, boop, droop. Yeah, like 2026, that makes a little bit more sense. So that's where we're at, I think. And, if you're looking at the moon narrative, you're probably not watching. You're probably not watching. You abandoned ship a long time ago. For those of you with some sense and sanity and remember how this works, that it's always moon looking when it's the worst time to buy, and it's doom and when it's the worst time to buy, best time to sell, and it's fire and brimstone and the worst possible news when it's the best time to buy and the worst time to sell. You'll appreciate what I say when I say that we're overextended. We're way overextended for where we are in this market cycle. I'll just share some other things from Mayfair here that are really cool. So here's momentum, and here's kind of like I'm not sure if this is volume or like money flow. It looks kind of like a money flow indicator, like kind of combination volume and money flow. But okay, in the past, 2017, 2018, momentum is going up, volume of buying is going up. Other run-ups in price, we've got momentum going up, we've got buying going up. Our last big bull run, quote unquote, momentum's going up, buying's going up. This is 2023. We've had prices going up with momentum going down. And we've had just this really, it's been money flowing out, and then there's a little kind of spike. But look at these volumes. You can just think of it like that. Look at this volume. This is not a bull run. We have descending momentum, pitiful volume, and what properly should have turned around a long time ago is still just like up here waiting for the music to stop. And it's important to remember that in 2023, this first big kickoff was on the back of fake ETF news. It was fake news. It was a erroneous article that said that an ETF had been approved when it hadn't. And then we've had, all of these new cycles of hopium-fueled insanity. And so we're way overextended. We're overbought. This is monthly. So this is big scale, big momentum moves. We are way overbought on the RSI on the monthly. We've been in greed for weeks, and it's not hard to go back and look at what happens when these two confluent three, let's call it three confluence indicators. So last time we had high prices, high greed, overbought on the RSI. We were already at the end of whatever excitement was happening, not the beginning. This is the beginning here. And in these stages, we've got, low to middle RSI. We're still kind of in the, disbelief, moving up into greed. So my point is, if you look back at these moments, and it might even be easier to see on the weekly, there's probably just more data. So weekly, these crossings of the RSI, they're not as strong. Monthly, there's fewer of them, and they really show like where these big moves in price happen. If we look at the weekly, we can see, more of them, but they're smaller. But we can still see that when we are at, cooking on the RSI and cooking in greed, that's where the big drop-offs happen next. Here it is again. Here it is again. This was a fun one. So we went back to overbought on the RSI, and we didn't even get up into the greed zone, and we still had the big drop. So whenever we're overcooked, we get cooked. And so we've already started the descent on the weekly. On the monthly, we're way the hell up here, and we're starting to turn around. So that is my prediction for 2023. We're going to start with a crash. And panic. I think there's going to be probably either the ETF doesn't get approved, or it's a sell the news kind of thing, and we just, the ETF's approved, but the price is going down, and all those people that were there, trying to capitalize on that big moment are going to be like, what the hell? Like, this is the thing all the experts said was going to happen. It happened, and now price is cratering. So no matter what, we've got to pay the piper. So, all right, if I'm going to leave a visual here for future Ryan to come back in 2023 or 2025, I guess. Holy crap. At the end of 2024, beginning of 2025, here is my 2024 chart. I think option 1, I'm going to put in orange. This is the one that I don't want to see happen, where we're basically going to kind of come back down, retrace a bit, and then have a shoot for it. We're going to go before we're ready. We're going to try and go to the moon with our bags half packed. It's going to be, stopped out. It'll probably get back up to all-time highs. I think that's about the max of where we'd get. And that might not even happen in this scenario until the end of 2024. So we still got to come down. And then, that's option 1, is we just shoot our wad early, and it's going to be another bloodbath for the little guys. Number 2, option 2, that I think could happen, and this will be in red. Colors are not really indicative of anything other than that's how I drew them. This scenario basically has us coming down more aggressively, which no one wants to see, but this is actually the better of the two outcomes, because then we would be coming back down for our ABC correction, also our automatic reaction, and then we start wyckoffing off, and we start actually building the structure that we need to bounce out in 2026, 2027. And so I'm hoping for this one, because it means this actually would have escape velocity to get to $100,000 Bitcoin and above. This one does not. It can't. It won't. Not going to happen. So So that's pretty much it. And I've said this before on this channel, I'll say it again. Crypto is not going anywhere without you. So, part of the challenge is like the urgency, like the urge to act. And I think that is built into these fear and greed cycles as well. And just, CTFO, watch as a detached observer, and DCA when things are greedy. I'm sorry, DCA when things are fearful and the RSIs are down and, the sentiment is low. And then be selling, be taking profit. I'm talking to myself. This is not financial advice. I'm saying, Ryan, be buying when people are selling, when they're fearful, and be selling when people are buying and they're greedy. So that's it. This is probably way longer than I wanted it to be, 30 minutes. Hey, you know what? It's the beginning of the year. Let's go. All right. Until next time, cheers.